Okay? When it taxes, it changes our numbers down, but it doesn't get anything. When it spends, it changes our numbers up, and it doesn't use anything up.
So why then are we so excited about the national debt?
Exactly. That's why I'm running here. It's a matter of conscience to break this, destroy this mythology, dispel all this nonsense.
So there is no debt?
Well, let me explain what the national debt actually is.
Okay.
There is a national debt because what we have is called the national debt. So it's, you know, and so the easiest way to explain it is everybody's worried about China. How are we ever going to pay back China? So the first thing about China is China doesn't start off with any dollars. Okay, they have to get their dollars somewhere. They didn't just appear overseas somewhere. They have to get them. What they do is they sell things to us. They sell hair dryers at department stores. They sell us tires. They sell us all kinds of things. And how do they get paid? Well, the money goes into their checking account at the Federal Reserve Bank. They have a checking account at the Federal Reserve Bank. Our Federal Reserve Bank has checking accounts for all the governments in the world and for all of our banks. You and I can't open accounts there, but it's a bank, and other banks can open accounts there, and governments have accounts there. And they call them reserve accounts because it's the Federal Reserve Bank, but it's just a checking account. So China's money goes into their checking account. Okay. There's another kind of account at the Federal Reserve called the U.S. Treasury Security. Okay. The U.S. Treasury Security is nothing more than a savings account at the Federal Reserve Bank. Okay. If you were to buy a Treasury Security, I don't know if any of you have, you send your money to the government and you get it back with interest. Any other bank would call that a savings account or a CD. You send the money, you get it back with interest. They call it a U.S. Treasury Security. They put a fancy name on it. Whatever. They call it whatever they want. I'm going to call them savings accounts. Treasury securities are savings accounts, functionally savings accounts at the Federal Reserve. Okay. All right. So China sells their hair dryers. Their dollars go into their checking account at the Fed. Okay. Then they have a couple of choices. They could spend those dollars, in which case they go from their checking account to somebody else's, whoever they bought the stuff from. They could do nothing and leave it in their checking account. It only pays 0.1% interest right now. They used to pay any interest. Or they can buy Treasury securities that pay more interest, which invariably they happen to do. When they buy Treasury securities, what do? We just shift the money, shift those dollars from their checking account at the Fed to their savings account at the Fed. And that's called funding the U.S. debt. That's called the U.S. going into debt, because we owe China all this money in their savings account. Now, what does that mean? What do we owe them? Well, when those securities mature, which they do every week for tens of billions, what we owe them is that once they mature, we shift the dollars plus interest from their savings account back to their checking account. And then the debt is paid. No checks from the grandchildren, okay, none of this other doom and gloom. And if you look right now, the total U.S. debt outstanding is about $13 trillion. Where is it? What is it? That's all the money that's in savings accounts at the Federal Reserve Bank. It's like, so what? Do we think there's too much savings at the Fed? It's like too little. It doesn't matter. Is there, you know, and why do we care if China's money is in their checking account or in their savings account? Okay, people say, what if China doesn't buy the debt? Well, that means they're just going to leave the money in their checking and not put it in savings. Why should we care? Well, we don't care. We should care. We do care. We have the President and the Secretary of State flying over to China, our our bankers presumably, negotiating on human rights and nuclear weapons and, you know, making sure we don't get them upset because we need their money to fund Afghanistan and health care. It's absolutely not true. Okay, all that, you know, why does our government care whether China's dollars are in their checking account or their savings account at the Federal Reserve? And the answer, if you go back far enough, is back when we were on the gold standard, which is ancient history now. Money in those checking accounts could be cashed in for the nation's gold supply. You could take it out, we would run out of gold, we would default on our promise to convert money to gold. Okay? And so there was an imperative to make sure that they bought Treasury securities and moved the money out of their checking account into their savings account, where you can't cash it in for gold until after the bonds mature, until after they get moved back into your checking account. And so when those bonds are coming due, we wanted to make sure that they would rebuy their Treasury securities and not cash the money in for gold. This has been gone since 1934 domestically and 1971 internationally. And yet this mythology, what's now mythology, or this now false understanding, is continuing to drive foreign policy for the worse. Okay, and that's why I'm running, just as a matter of conscience. It's like, I know how to do this. The people we have that I'm running against don't understand this. They're not qualified in this time of economic emergency to solve our nation's economic problem, because they don't understand simple monetary operations or what it means. Okay, we've already got 200 of the finest lawyers in the world in Congress, and they've got it wrong. And from what I saw in the debates, both of our candidates have it wrong. And they're going to be pushing for the wrong things that are making things worse, that are causing the problem, that are destroying jobs and causing unemployment. It all can be well-intentioned, but if you don't have the understanding and the knowledge and the tools to know which buttons to push when you're in that helicopter, you're going to crash and burn. Okay?
So what then is if the debt is not the issue,
Yeah.
and we're
Right.
spinning our wheels worrying about how we're gonna pay for this and that,
Right,
et cetera, what is the answer?
Okay, so why did the Democrats take $500 billion out of future Medicare budgets, okay, to pay for health care? Because they thought we'd run out of money. There was no other reason to do it. They had to pay for it. If they'd understood monetary operations, they wouldn't have done that. They wouldn't have cut the $500 billion out of Medicare. They did it on a mistake. Why are we not lowering taxes now? My first proposal is for a full payroll tax holiday, where we just stop taking FICA payments out of everybody's paycheck.
For how long?
Employers and employees, indefinitely. We suspend it. And I'll explain why it's likely we will never have to put it on. Okay. Now, what does that do? Okay, we know that we need to get sales up to get jobs back. So all of a sudden, people earning, and I'll just take a typical person earning $50,000 a year, that's average for Connecticut, we'll see approximately an 8%, a little over 8% increase in his take-home pay. So he'll be getting an extra, something over $300 a month, maybe $320 a month, extra take-home pay every month. A husband and wife making $100,000, that family's going to see, something like $650 a month increase in their take-home pay. Okay, that's serious money. That restores sales, jobs, that allows them to make their payments, which fixes the banks the right way from the bottom up. Okay, why did we have a financial crisis? Because people couldn't make their mortgage payments. We're bailing out the banks with this top-down trillions of dollars trying to keep them alive because delinquencies are up to 20% and people can't make their mortgage payments. The right way to do that, and it doesn't work. A year later, last month, we had 100,000 or something foreclosures, record numbers of foreclosures. The right way to do it is to stop taking money out of people's paychecks. By the way, this is not giving anyone anything. We're just stop taking it away. And now they have enough take-home pay to make their mortgage payment if they want to. The delinquencies go away, the banks don't have a problem. And that's what the banks want. All they want is people who can make their payments. They don't want bailouts for bad loans and lost capital.
But let me ask you this. Granted, this financial crisis that was caused by the housing market, tell me where I'm wrong.
Sure.
If you did what you just suggested, give the money back to the people.
Well, we're not giving it back, we just stopped taking it away.
From them, so that they can now make these mortgage payments.
Yeah.
Where then is the motivation for the financial institutions to stop playing those games with that they were playing in the mortgage industry?
Right.
Where they were selling mortgages to people who couldn't afford it, and etc. There's no motivation there. They're just going to continue doing that. Yeah. Because they're not gonna have a problem with it then.
Right, well, they took losses from two sources. They took losses from fraud. They got caught in fraud. Their own mortgage officers defrauded the lenders by loaning to people who had no chance of paying it back, by knowing who the appraisers were that would appraise over value, by knowing who the accountants were that would actually lie about income. And those files are full of fraudulent income statements and fraudulent appraisals. This payroll tax holiday is not going to bail out those kinds of losses. What it will do is people who are working for a living, have legitimate mortgages, and can, suddenly, bring themselves up to date and start paying. And there's been so much damage done over the last 2 years that, to the banks, they've learned their lesson. They've tightened up on everything. Now you have to have legitimate credit statements. You have to have legitimate appraisals. And they have to have proper controls in place, or they can't raise capital. People will not invest in them if they're getting defrauded by their own lenders. So that discipline, that market discipline has already been imposed on the banks. That's last year's problem, and investors won't tolerate banks that don't have proper controls in place to make sure that that doesn't happen again, because they lost real money. I mean, we saw investors in these banks losing, in excess of 90% of their investments. Okay. But right now, we know that if we lower, and everybody will agree, that if we have this payroll tax holiday, this payroll tax suspension, it will restore the economy, and it will restore, it will facilitate the creation of 20 million new jobs over the next couple of years. And we will be back to the good kind of economy we had 10 years ago with unemployment under 4%. So why don't they do it? It's because they say, how are we going to pay for Social Security? The FICA money is dedicated to Social Security. We're going to have to cut Social Security if we do that. That's where I come in. Of course not. Social Security is just changing numbers out in accounts. It's got nothing to do with collecting FICA taxes. If those taxes were paid in cash, we just throw it away. There is no operational connection. The connection is purely psychological. There is no actual, dependency of spending is not revenue constrained. Spending is not dependent on this coming in at the operational level.
But isn't Social Security and to a certain degree even Medicare contingent upon the contributions that how much you're going to get back from that is contingent on how much you've put into it.
Right. Now that's the formula we use to know how to pay people. So to take care of that, when we don't make up, to keep the accounting straight, what we would do is when we suspend these taxes is have the U.S. Treasury make the payments for us. That way the accountants have a record of that you're still going to get your retirement at the end even though you haven't been making the payment because the Treasury has been making the payment for you. So conveniently there's an easy way to do that.
But then everybody gets the same amount, or I mean, someone who maybe works 3 years versus someone who's worked 30 years.
Right, so while you're working, instead of you making the payments, the Treasury will make the payments for you. If you're not working, the Treasury isn't making the payments for you, but you don't owe them anyway because you're not working. And so you will still have the same accounting records to show what you're eligible for. It won't change any of that.
And Medicare pretty much the same way?
Yeah, Medicare and Social Security are both taken out of as in form of payroll taxes, and we will just suspend taking those out of people's checks. The Treasury will make those payments for us to keep the accounting records straight. Okay, and so, what it requires to do this is the understanding that these two things are not operationally connected, that these are self-imposed constraints. We have a lot of self-imposed constraints on our spending, and we have to have self-imposed constraints. The Treasury is limited by what Congress approves. They can't spend whatever they want. Okay. And so that's a self-imposed constraint. That man is spending money. If he wasn't constrained by Congress, he could spend whatever he wanted. Congress has an internal self-imposed constraint on themselves that says we have pay-go, for example. We don't want to spend more than revenues. That's not an operational constraint. That's Congress. That's the space between their ears that's constraining them from doing the right thing to get us back to full employment. That's nothing operational constraining them. So yes, there are lots of self-imposed constraints on government spending, and for good reason. You can't just have people in the Treasury spend whatever they want. That doesn't make any sense. Yeah. So now let's take a look at the Social Security Trust Fund to see exactly what that is. What that trust fund is, and any trust fund is for the federal government, is record keeping, and it's important record keeping. So when you pay your Social Security taxes, they change the number down in your account. The government doesn't get anything, but they change the number up in the trust fund so that the account's balanced. And the accountant will come in at the end of the day and says, okay, your number went down 100, this one went up 100, 100 equals 100, we're in balance, we go home. Okay? Then the next day they make a $1,000 payment to somebody, and they change his number up, and they change the trust fund number down, and they then the accountants come in at the end of the day, and they look at the new total, and they say, okay, this one's down 1,000, this one's up 1,000, everything's in balance, nobody made a mistake, you can go home. Okay? And the trust fund reflects how many numbers have been changed up as they make payments, and how many numbers have been changed down as they collect, but it's not it's not the money, it's not the thing that they use to pay anything, it's what they use for keeping records of what they've already done. It's after the fact record keeping. And that's what accounting is. You account for things. It's not a causal thing. It's how you account for things.